Do, 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 do. What am I going to talk about? All right. Late April, I did a Secretwars episode on Gibson Energy, GEI, on the Toronto Stock Exchange. And I just had it smacking it, working at stage 1. After a nice stage 2, stage 3, stage 4, hitting the bottom. And now I had a stage 1 right here. So April, where is that? Right here. Bam. So right here, that's where I had it. I had some monthly defined support. I had some monthly defined resistance. Patterns within patterns. Copy that. And here we are today, guys. It's really moving up towards that last resistance at $19 before having almost nothing on the way up. Let me get an arrow. Arrow, please. Do, 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 do. And here, this would be my target. If I ever have a monthly close above 19 using my classic chart trading framework, my implied measure move would bring me all the way to 22. Gling, 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 gling. But until then, that's the furthest away least probable target. Or maybe not. Look at that. That's even a bigger target right here. Whoop. I love the clone. Control click. Clone. Yeah, and I think I did some setups like that, estimating shared breakout line of smaller patterns, having targets reaching that or hitting it, that resistance. And after that, making a nice launching pattern. I always trust more breakouts where there's a lot of tests of the previous highs before it breaks out than a parabolic or a single test of a previous high. So let's say I would go up here and it would break out this month and go like that. It's nice, but that breakout line, I don't trust it as much as the breakout line which has been tested multiple times. So if that's the breakout line that I trust multiple times, tuck, 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 and then breakout, then my more probable possible measured move would be, drum roll, forgot to change. The most probable would be this measured move right here. This small target right here. Add it to the breakout line. That's the one I trust the most. I could even go as far as take the bottom here. And I know that makes a whole bunch of targets, but this bottom pattern more probable of reaching its possible move than a single month going through that horizontal line, that resistance, having that measured move. If we would have had a breakout back here for this bottom pattern, like a double bottom on the monthly, if I would have had a candle here, any of these, look at that. That's a lot of noise. Any of these would have broken out. That would have been this move right here, top to bottom, that I would trust most. And here you would have had a lot of traps, guys. Let's say 1 test, 2 tests, 3, 4. And then you say, during the month, I was above 19, man. I'm going in. It can't close below. And then, close below, stock. Next month, I'm above. Yes, finally it's breaking out. By the end of the month, close below 19. So it happened 1, 2, 3, 4, 5 months, and even 6 months. Lot of whipsaws. And what happens after that? Well, price goes down, stage 1. You think you would have stayed here over a year? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 18 months. Like people say, they're like, I think that's what they call dead money. hoping maybe it's going to go back up. Just doesn't make sense, right? You would have moved your risk away. You would have taken your loss here. So avoid losing those 1% of your NAVs if you're using money management. Just make sure the monthly candle closes above the resistance line. Every time I failed to listen to my own rules, I've had a high probability of regretting it, that the price action went back down, getting triggered out. Don't pray, don't have wishful thinking, don't try to be lucky. Just apply your trading framework. But we do have a pattern here. It is going above. The previous month closed above this single. See, like I said, I trust less single tests of previous highs to confirm a breakout. Still going up. So this is the candle I'm looking for. Really like to have a close above 19 on the monthly candle chart. That'd be awesome. Or just a close above 18 and have that shorter pattern right here, possibly hitting some resistance along the way. So on the weekly, that's probably going to look like a pullback. You're in because the monthly close is there. We'll see on the weekly if we have a Stan Weinstein stage 2 breakout. If we do, at least we could expect within 1 to 3 months, a pullback around 19 back to the breakout line, this monthly defined breakout line. And after that, we could enter if there's a pullback on contracting volume. Okay, let's scoot over to the weekly. Weekly. See that, all this noise? Wow, that looked like a breakout here. Those are the wicks. High up in an advance. We could have thought it was a stage 2 continuation breakout. But if you didn't go check the higher trend like Stan says, then here you would have been whipsawed. And now it's been underperforming for a while, being in that stage 1 compared to the SPX, as the SPX has moved up during that period. But right now, you're above the zero line compared to the SPX. You're starting to outperform the SPX. That's very good for when you go from negative to positive. You're above the Ichimoku cloud. You're above the 30-week moving average. The only thing is the 30-week moving average is still angling downwards. So it just needs a little bit more. That's just another more reason to just wait. Find reasons to wait, guys. And right here, just needs more price action above it. So that could justify and coincide with a nice wait till the end of the month. See how many more of these weekly candles we could get here. And maybe by the 3rd week, 3 more weeks, you're going to have a skewed upwards 30-week average. And today's Friday, and I doubt we have breakout type volume right here on this candle. You want twice the average of the previous 4 weeks. You'd want more of a candle that went up here. We don't have that yet. So it's really looking good, but I would really like to see what happens. If it could go up to 19 with a crazy candle, that'd be nice. With a monthly candle close above 19. So maybe 1-2 weeks, bounce off here, come back, then up with the crazy volume. Then would be golden here, would be even more up through the SPX, hopefully through the Mansfield relative strength compared to the SPX. This is embryonic, guys, very, very, very close. This is a nice base. Just make sure the trend's in your favor, guys. It's just not there yet. Use this as an example. This looks super good. Went back in, guys. Trying to go out, then go through the 19. Went back in. And there's always like one clue, like all your metrics. If it's not the monthly trend, even if the monthly trend, let's say we have had a close above and had the volume, well, you're still below the Mansfield indicator below the zero line. So, all right, that's you're out, you know. If you really want to get in, you're just going to look at one metric and find anyone that's good, but you want the ensemble of them, the weight of evidence, as Stan says, if I'm quoting him correctly. You want all these to be aligned. And when they'll be aligned, you'll have solid stage 2s that really explode properly. These are all observations done from winning successful, powerful trades that Stan has done over his years. You got to learn to respect that, guys. So that's it for Gibson. Not in really trying to get out of the stage one. We might be just a few more candles away, guys, but it's really looking nice. Where's Gibson? Remember forest to trees, energy, oil and gas. So energy, what do we know? Well, it's on the TSX, right? So the TSX, index, TSXX. So TSX is fighting to continue its stage 2. Really going upwards. It has this pattern here, continuation pattern breakout. Still underperforming the SPX and really fighting above that line. On the monthly, I had a breakout here above this line. Again, not multiple tests, right? So I trust them less, but still starting to go upwards. 12-month moving average going upwards. So TSX tempting a stage 2 continuation, right? Having some stage 3 action right here. So that's the health of the index that you're in. Sector. Energy. Yeah, energy has a breakout, same thing as the TSX, usually in line with the TSX. Going up, hard pullback within 1 to 3 months, pull back to the breakout line on the monthly. How does it look like? And on the Stan weekly, it's still below that breakout line, guys. Slowly getting close to underperforming the SPX. So it's really some do or die time here to see if you're going to go back within that pattern or if it's going to be able to close and get some closes up here above this breakout line. Tight, unknown. Looks like a stage 2 consolidation, close to 30 average, but everything has to align with the monthly candle trend. You got to keep an eye on this. It's stocks within that sector, guys, that changes this, right? So is GEI a leader and it's breaking out? We'll start dragging this up while others lead and move up with the GEI. Industry. Man, where's that oil and gas? Oil and gas, XOP. Yeah, it's right here. So it's industry that it's in. Looks pretty much like trend line. Like energy in its consolidation pattern, still outperforming the SPX more than the sector as a whole. What does it look like on the monthly? Yeah, it looks pretty much like the SPX. Still, but it's under its breakout line. So there's really a lot of stuff happening here. You had this bottom pattern here that got broken out of. Its implied measured move gets you to this bigger pattern. And what I like here is these multiple monthly candles testing. Remember, I just said I trust that more. When there's multiple tests for previous highs, if it breaks out, then a single retest and that breaks out, and especially in the parabolic mode, that it went up really like a straight hockey stick. You don't want that. So this oil and gas, man, I don't know. It looks, it's like, remember I did a markets review recently on sectors, and some sectors are starting to wind down, but the oil and gas and the energy sector seems to have peaked a long time ago within that cycle, while the other ones didn't even peak. They just continue going on or barely stage 3 and then continued. Oil and sector of the energy actually peaked, went through a full stage 4 cycle, and while the other ones keep going up, it's been bottoming in. So is this sector rotation where we're going to start, it's going to start going upwards? Well, it's trying. It's really trying. So it's a good place to look for. And if you want the early stage 2s, just make sure your index, your sector, industries are aligned. So those TSX stocks there, that oil and gas, they could be very interesting if the other sectors start rolling out. If technology exasperates its current run, and the other ones that never stopped continuing, the money could be rolling into here. Okay, guys, that's how I see it. GEI, man, it looks solid. Keep an eye for a stage 2 breakout with the correct confirmation signals you want. Ciao, guys.